Good morning, traders. Ouch. What can I say? This one really hurt, didn't it? This drop. As many of you know, I have been discussing this possibility of us dropping to this ascending trend line here in black that you see. But also my bias did show through in previous videos. I did not actually think we could get there, or we would get there, but we have. And so here we are, and I need to reevaluate the possibility because we dropped so fast. So I thought, if we do get to this 36,000 mark, which we haven't actually arrived at yet, but I thought, well, it's not going to be a fast drop, and maybe my um, analysis depended too heavily upon the Glassnode data, the on-chain analysis referring to liquidity in the market. Because I have learned that liquidity, has. I'm not an $800 subscriber for Glassnode, and that's where you really get the up to the minute analysis regarding liquidity. But I do watch the Glassnode, and I would encourage you guys to subscribe as well to the channel on YouTube or Telegram. Glassnode puts out uh, typically once a week. They'll do an analysis of their on-chain data, and it includes professional or paid for data that you can't just get as a free or even a lower level subscriber. And so I find it very valuable. And of course, I'm referring to the data point regarding illiquidity in the market. And so a couple of weeks ago, I watched their analysis regarding illiquidity being at an all-time high. And I relied heavily upon that data point, thinking that this indicates it will be difficult for the bears to take us down to this trend line. It looks like we are, in fact, headed to that area. And I did not think we would drop so rapidly. Of course, I do have a bit of a trend line here, which seemed to be significant to the market, because once we hit that level and drop below it, it was quick. And so we are currently bouncing on another level I have drawn here, and this comes from across the way. We have several pivot points, breakthroughs, lots of volume, etc., indicating that it is a level that the market is respecting. Additionally, we do see the bounce here. But I do now believe that what I had pointed out previously as a bear flag is in fact being confirmed as the bear flag that it was. And I think we will try to continue down to that 36,000 mark. For me, it doesn't make too much sense for me to sell here in any particular position and try to, you know, re-enter at a lower price. There's just not enough reward for me to take that kind of risk, especially as you guys know, my bias is long, and it still is long. And this is, for me, this is just a retraction, a drawback before more bullish behavior comes into the price action. So as far as this trend line, this or the reason why I consider it significant is it does go all the way back to, I believe, March of 2020. when I began drawing it. I guess here would be the most significant point. So actually, the October of 2019, we can begin to see where, or even earlier than that, 25th of September. So we can begin to see, if I were to zoom in here, which I'm not because it kind of messes everything up, but a big drop to that level, it sustained us, and we went below it. We had a big bull momentum to the upside, and we hit our heads on that level, very tiny. Um, it's hard to see, but I'm going to circle it, and we couldn't get across it. All right, so the market started to respect this trend line way back in September through October of 2019. Excuse me. So that has been a lot of time on the charts, and therefore I consider it very significant. Additionally, when we came up over here, and now I can begin to zoom in a little bit without messing up my chart too much, we, popped to the top of this. Market sat on this for a while, and tremendous movement to the upside shortly thereafter, like within a week, indicating again further that this is a significant line of resistance or support, again, depending upon the side you're on. And now we're to the top side of that, and we have been since December of 2020. All right. So over a year, we've been to the top side of this, and it has provided very good support for us. You can see we came down and touched it during that May sell-off. And once we hit that, we were off to the races again to the upside. So I do believe that we are going to come down and touch that. And I am anticipating the price action will be similar to our May sell-off. So once we hit this in July, we really shot to the upside. I mean, tremendous bullish price action as we capitulated to this level and then moved again to the upside. So that being said, let's come over to current day, present day situation. We have again dropped below this trend line, which really I had just marked to show um, bullish divergence on the RSI at that point. All right, so we went from here and we were trending up, and I took away that trend line because it has been invalidated now with this bearish price action. So again, this bear flag is playing out. We hit our heads on the blue trend line and now are coming down. I do expect us to touch this 36, and definitely not going to make, my confidence is a little shattered here, to be honest, folks. I'm not going to make predictions, but personally, I remain bullish, and I do think that this is our last touch of a trend line. But I know you've heard me say this before, so I don't blame you if you don't have a whole lot of confidence in my analysis at this point. Um, Let me show you where I was wrong. I was wrong here. Thought this would be it, the green trend line. We came down to the below the blue, and so then I knew I had to refactor. And then the bulls actually took us back above the blue, but we never did confirm that move. And that's when I started to reiterate the fact that this might be a bear flag. All right. Anyways, all that being said, it looks like we are going to look for that 36,000. Actually, a touch anywhere here. I don't know. It's ascending, so it could be, I'm expecting around 36,000 is where the market finally capitulates. But again, I was wrong here at the green trend line, and so could be wrong here as well. Um, but let's look at that. You can see that it's definitely a significant trend line, and it's been in existence for over 2 years now, providing either resistance or support, mainly support. All right, all that out of the way, let's also hop over Well, I did have a question from a subscriber about Ethereum, where I think that will go. Again, guys, Bitcoin is our lead dog. So if we only have, you know, what, from where we're at, our price today, currently, we have another 8% drop. If I'm looking at that $36,000 level, you can pretty much do the same thing here on Ethereum. I have levels drawn out here. Uh, Ethereum will be a little bit more exaggerated. So let's say, I would say 2,500 is within the realm of possibility for Ethereum for us to drop to that level of support at around 2,500 before we really see any sort of bullish traction taking place, some sort of bounce. All right. So that's what I'm looking at on Ethereum. All right, now let's jump over to our uh, indexes because this is where our price action is correlating to. All right, look at SPY, big drop. Once we came below that channel, it's been nothing but red candles here, all the way down to the 200-day. First time we've touched the 200-day since June of 2020. All right. And of course, I've said this before, first time we've broken to the downside of this channel since March or April of 2020. All right. That's highly significant. But now we are coming upon support. You know, when you have this many days of sell off in price action, uh, eventually you're going to need, the bears are going to need to take a rest. And what better place to take a rest than right here at the 200-day? I suspect come Monday we bounce. And I suspect that the S&P comes all the way back up during this next week, to touch our heads on the underside of this channel, which my subscribers know I like to call kissing mama goodbye. We pay one more last respect to that area of significant support. We are grateful for this channel. It carried us in bullish action for over almost 2 years. And so we definitely want to come up there and pay our respects to that last line. I do see the price action moving up. We'll kiss that before we do either further downside action, or as I've indicated, might be a probability uh, or a possibility, is sideways action as we round this corner on the broader markets. It will take some time. All right. With this much bullish action, we've had almost 2 years of bullish action. It will take some time for the market to recognize that we are heading into maybe a bearish market for the next few years. And so, as the market recognizes and realizes that, sell off will take place. And then the reason why I have this sideways action is because this hinges upon dollar price action. So let me erase these lines and we'll jump over there. And it's really tricky because what is the dollar going to do? Well, we're starting to see some weakness in the dollar. All right. We fell below this ascending trend line, which has been here for a half a year as the dollar continues to strengthen against other global fiat currencies. Of course, all fiat currencies are being debased at the moment. Well, I guess they always have been debased. And it's just a matter who debases their currency the slowest remains the strongest. And of course, that is the goal of the Fed, right? They want to keep the dollar strong globally as much as possible. Or do they? I don't know. Listen, I'm just evaluating from the technical analysis side, so I suppose I shouldn't interject any opinion regarding that. Don't maybe have enough knowledge to do that. But what I do see is the dollar continues to remain strong, and I'm just trying to evaluate why that actually is with the amount of money that we have printed and thrown into the system. One of my theories is that we are just simply printing at a slower rate than the rest of the global governments. All right. So the bears took us below. We hit support here. bulls took us back above, but anytime you cross these areas of significance, you start to erase the significance of those trend lines. So I do suspect in the future we break below again, and I do think that the Fed overall will try to keep the dollar strong. So just because we break below this trend line and drop down doesn't mean that the dollar goes immediately weak. So as we approach maybe the 200-day, then Fed chairman steps up, has some words in front of the public, strengthens the confidence in the US dollar. We go up again, and then confidence fades again as the Fed begins to print or as we see the results of inflation, et cetera, et cetera. Confidence dwindles, we go down. Fed chairman steps up, bolsters confidence, or maybe we have some action within the Fed, goes up again, and we continue this pattern sideways, which will definitely play with our minds. But that's what I look to be a possibility within the scenario of all possibilities. And that being said, the market could correlate with that data or correlate inversely with that data. And either way, it would maybe also do some sideways action as we begin to round this long-term corner. All right, into midsummer is where I suspect we finally start to recognize that we're not going to go much higher. In fact, if anything, we will go lower. All right, let me take you over to the Dow just to show you again one of the possibilities here is that this is starting to form a head and shoulders pattern of sorts, that being the left shoulder, this being the head. And once we touch this neckline here and bounce, which I expect we'll do, we form the right shoulder. And again, time correlates with the data that I'm seeing that midsummer is where we would eventually recognize we have rounded this corner and are going to break through and become bearish in the markets. And hopefully not all hell breaks loose. I don't want to be a doomsdayer, but we need to prepare for this scenario because it's looking more and more like this is something that could come true. All right. That is my update for today. Again, for all of my subscribers that have been following me on my trades, we are down. I am down a lot more than the previous video. I indicated 10%. So to be honest with you, my portfolio has decreased maybe 30% now. I'm not going to make any moves here. All right. I'm going to hold through this because, again, my bias remains bullish. I don't think this is the start of a longer term bear market in the crypto space. Yes, we are seeing signs of this on the indexes. Yes, this is going to play over into the crypto space, but I do believe we have some time. I don't think we're just going to continue to drop like a hot rock here. And that's just where I arrive at. You all may have a different conclusion. And if you do, please feel free to share that in the comments and share your data along with that so we can all learn together. I'm not right 100% of the time, as you guys know and have seen. And when I am wrong, I like to know why I'm wrong so that I don't make the same mistake in the future. And so that's where I'm at with all of this. So please, if you have valuable data that you can share with me to maybe show me some variables that I haven't factored in to my equation here, show me some data points that are of value in incorporating into my technical analysis, I would very much appreciate that. All right, guys, take care, and we will talk to you in the next update. Peace.